Let's welcome Meng Teck.
Hello,
All right, I'm
everyone.
Meng Teck.
Hi, how's it going?
Hello, hi. So I let's applause for you. Thank you.
Okay, so today my topic will be about global investing. Okay, so I believe a lot of you just now watched Mr. Casey Chong's sharing. In fact, Mr. Casey Chong is also a friend of mine, and his sharing is really very good, especially when it comes to value investing and the magic formula. So for me personally, today what I want to share is something that is a little bit unusual. I won't be going into the technical details with you or going into very deep fundamental, but what I want to be sharing today will be more related to whether you want to invest in Malaysia only or you want to explore investing overseas. Now, whatever I'll be sharing today will sound a little bit unconventional and may not be nice to the ear to listen to, especially if you are an active investor in Bursa Malaysia. But maybe let me share a little something that I personally learned from my experience and what works for me. And that is, and what I want to share about is global investing. Okay, so let me open up my slide. Okay, are we able to see our slide? Yes? Yep. So this slide is on, right? And the topic for today is called global investing. And what I want to share is what is the benefit and what is the risk of investing overseas. Now, usually when I talk to many people about investing overseas, a common thing that I get will be, investing overseas is risky because there is currency risk and also because there are many things that we don't understand. And it's true. Before this, when I do not know how to invest globally, I used to think that investing globally is risky because there are many things that I don't understand and there is also currency risk. But after a while, I told myself, could this be an excuse that I give myself to not walk out from my comfort zone? Because Malaysia investing seems like something that is pretty straightforward. And after I tried investing overseas, I realized that actually it is not that difficult. In fact, after a while, I realized that it's actually easier to invest overseas than in Malaysia. Now, maybe this comes from my bad experience of investing in Malaysia market in the past. I personally, right now, if you say long-term investment wise, I do not favor investing in Malaysia stocks for long-term. Not to say that Malaysia stocks cannot make money if you invest for long-term, but it's about what is your investment goal. Personally, from my observation, it's actually very, Malaysia is a very good market to make money if you are a mid to short-term trader, right? If you are a long-term investor, I think there are less than 5 or even 6 stocks that are able to give you more than 20% return per annum, right? In the past 10 years, maybe Hatta Lega, Top Glove. Other than the glove counters, other stocks, very difficult to give you very good return if you look at the past 10 years annualized, right? There are some exceptions, but very few. Especially moving forward in the next 10 years, if you ask me what will be the multi-bagger or 10-bagger in the next 10 years from Malaysia market, I will be, quite challenged to find one that I think have high confidence that it can go and grow 10 times in the next 10 years. But if you ask me globally, what are the stocks that I believe can go 5 times or even 10 times, I have quite a lot, right? I have quite a lot that I have high confidence that they can grow 5 times or even 10 times in the next 10 years. So actually, we want to talk about the topic of investing versus trading first. Okay. Now, what is investing? Investing is buying and holding a stock for long term, for the foreseeable future. You actually don't have a time horizon to sell. You just know now it's doing very good and it will be doing very good in the foreseeable future, and it will keep growing better and better in the next 5 year, 10 year until the situation change, which now you don't know why it will change. If you are doing trading, my definition of doing trading is not necessarily purely based on chart. If you buy a stock because it's undervalued, now it's, usually it's PE 10. For some reason, there is a stock market crash, then the share price drop to PE 7, then you buy it, and it go from PE 7 to PE 10 and you make the money. That to me is also a trading, right? You are trading based on fundamental, right? You are trading based on the PE multiple as the support resistance, okay? And that will be also a mid to short-term trading, right? So if you look at Malaysia stocks, a lot of it can be used like that, because many Malaysian stocks are actually cyclical, right? Many Malaysian stocks are actually cyclical. So if you look at the way Malaysians, successful investors and traders in Malaysia, they usually compare PE ratio, or this company PE ratio is lower than the other company's PE ratio, and it has growth in the coming 1 or 2 years because they get a certain headwind or something. So based on that, they project the forward PE, forward earning per share, all this, and they come up with a valuation. Once a company share reach the valuation, they will sell, right? You look at the whatever super investor around, or whatever famous investors in Malaysia, they rarely hold a share for more than 5 years, one, right? Type in yes if you agree, right? Those are making very good return, man, right? So in this case, for me, it's still considered trading. They even rarely hold a share more than 1 year, in fact, right? Maximum 1 to 2 years, then they will sell. But they will sell for 100, 200% profit lah. So it's actually very good profit, but that's considered swing trading to me, right? Long-term investment-wise is buying a share and keeping for it for 5 years, even 10 years, and you don't really have a target price. As long as a company continue to grow, you will just keep it. Now, this will be what a long-term investment grade stock will look like, right? The share price will move up and down, but because the value of the company, when the company have earnings per share growth, earnings growth continuously in the foreseeable future, not a cyclical, not sometimes go up, sometimes go down, but every year make more and more and more, and in a very fast way, this kind of company can be suitable for long-term investment holding. And that's what I want to talk about today. It's far easier to find this kind of high growth, long-term investment grade companies that fulfill the criteria, like what Casey said just now: good management, high ROE, good cash flow, right? And the PE ratio compared to growth is still reasonable, right? There are plenty of these stocks. But one thing that you need to watch out for nowadays is you need to look deeper. You cannot just simply look at PE ratio, right? Because nowadays, a lot of the fast-growing companies, potential companies, they are doing it, they are growing via a special growth model where they are actually having loss while growing, but they can turn in a profit anytime. So on the surface, it may look like they are a loss-making, lousy company, but if you look deeper, you will see that this company, if they want, they can make very high profit anytime. Example of this kind of company will be Amazon, will be, for example, what else? Amazon, Square would be C Limited. Later, I'll talk about them. So there are many of these companies that as they grow, they will go from bigger and bigger losses, and then the losses will become smaller and smaller, then making profit. But in short, if you really know how to look at it, their value will keep on growing higher and higher and higher. Okay, and many of the stocks that I'll be talking about later is already overvalued one. It's already overvalued by quite a lot, 20-30%. And yet they can still be very good investment even if you buy now. Because even if you buy a stock that is overvalued, as long as the value continue to grow, as long as the business continue to grow and become stronger and stronger, eventually, compared to the price you buy, you will still be able to make good profit. Okay, buying an even though looking overvalued stock. So if you are aiming for more than 20% per annum growth, how many stocks in Malaysia that you can buy and hold that you are confident can grow more than 20% every year? Okay, don't say the PE low or high. Just talk about the business earnings and revenue. Every year can consistently, on average, grow more than 20% per annum for the foreseeable future. Can you name a few of these stocks they are able to achieve this kind of return? Maybe you can try pasting in the comment there, right? In the foreseeable future, next 5 years, every year they should be able to grow more than 20% per annum. And you have high conviction. And I'm not talking about those cyclical one, something that you are sure on. Okay, so these kind of companies, if I ask you, can Facebook grow more than 20% per annum? You will say no problem. If I ask you, can Amazon grow more than 20% per annum? You say no problem. Can Shopee grow more than 20% per annum? You will say no problem as well. But Malaysia stocks, name me a few that you are sure that they can grow more than 20% every year. And it won't be affected by what politics or what. They can be very solid because of them and not easily affected by others. They can still grow. Any? Yeah. So when you look at the growth versus risk versus value, there are more opportunities globally. Again, I'm not bashing Malaysia. In fact, right, it's very easy to make money and very good to make money in Malaysia if you know how to catch a stock at a low price before they have a super good quarter or what, based on the short-term catalyst, and then the share price go up and you sell, right? If you have been following us, you will know that this year we just make 50-60% gain from SCGM, and we just made another 20-30% from NTPM. Wow, all got M1 at the back. So, and all these are actually considered swing trade because I saw a catalyst, and right now, based on the forward PE, they are undervalued. But these stocks, I personally am not keeping them for long term, because if you look at the indicators like ROE, if you look at the qualitative analysis in terms of competitive advantage, in terms of cash flow, quality of cash flow, all these things, they are not exactly the best. So I won't hold them for long term. I personally will just do swing trade on them. And yet, it can give pretty good return in a year, but it's a very active buy and sell and a lot of analysis involved. If you just want to buy and hold for long term, what are the chances that the fastest growth in the world, fastest growth stock in the world for buy and hold are available in Malaysia? High or low? Not really, not necessarily high. Number two, most of these companies are more likely to be either in US or China. Even if their business is not in US or China, they will still be listing their share in US or Hong Kong, okay, which is also part of China. Okay, sorry if I offended anyone with this. So US market is very attractive to global companies with ambition, right? So companies like even Shopee, right? Shopee Garena is under C Limited. Even though their business is in Southeast Asia, they don't choose to list in Singapore. They choose to list in US. Why? Because greater coverage, greater liquidity, investors there are more open-minded, right? And they can raise more money easily there. Hong Kong market, on the other hand, is a very good gateway for China-based company to list, to attract investors from all around the world to invest in their company, and also for the management to divest their share at a better valuation. In the past, companies like Alibaba, JD.com, all these, they prefer to list in US because it seems like US is a better place. But because of US-China tension and the constant criticism from US, now most of them prefer to list in Hong Kong. So from Hong Kong market and US market, you can find some of the best stocks in the world, right? Even those stocks that are, doing business in Russia or Africa, they are choosing to list on US, either via direct listing IPO or OTC, over the counter. So these two markets, okay, which I consider the main markets in the world, are actually where you can find some of the best long-term investment companies, the best companies in the world. And if you're able to catch them at an early stage, you could even have 10 baggers, 100 baggers also possible, right? And if you're not investing overseas and globally, you are missing out on some of the best long-term investment stocks. Now, if you are just saying about, okay, if I'm very good in trading, I know how to look at chart, I am good in getting information, I have a good community to support us, invest together, we are doing well, is it possible to have very high return, even higher than the best investors in the world, even if you are based in Malaysia? It's possible, but that will involve a lot of trading. What I'm saying is investing, just buy and hold, right? I believe globally, it's easier for you to make good return buying and holding companies for many reasons. Number one, right? In the future, the fast growth companies are the companies that will benefit from AI, 5G, and Internet of Things play, and the increasing adaptation of e-commerce or digitalization. And if you ask me, is there any company in Malaysia that will benefit from this? Yes, they are, but mainly they are hardware manufacturer. And hardware manufacturer, by default, is quite difficult to scale. And even when they scale, there could be better China, Taiwan competitor, right, that will come in and cut your price. It's actually not easy to maintain a competitive advantage. I know some companies do, they are really specialized and they are very good and very fast and early in their research, but mostly it will be difficult, right? And it depends on their customers, their clients' growth to order things from them. But if you are not looking at the manufacturer level, if you're looking at the platform level, which is very scalable, because if all you have is a brand, to grow the brand globally, if you're not having any assets, you're not controlling any production on your own, whatever, it's very easy and fast for you to grow, right? Because it's internet, over the internet only, right? So there is no barrier, there is no resistance for growth. That's why you see companies like Shopee being able to grow at 100%, 200% year on year, right? If you look at this, Garena, C Limited, that owns Garena, Shopee, and C Money, look at their growth in the past few years. Every year, the growth has been more than 20%, right? Especially in the recent years, it's very crazy, very high growth, right? In fact, after this COVID, their growth will be even more accelerated because everybody is jumping to e-commerce now. On the other hand, if you look at CrowdStrike, a cybersecurity software company, right? The growth is also very fast, 100% every year. And these are software with recurring income. And just like C Limited, both these companies enjoy a special kind of competitive advantage called network effect. Okay, that means the more people are using these services, the stronger and more attractive these software and services become. The more sellers are using Shopee, the more buyer will come to shop. The more buyer come to shop, the more seller will come and advertise and open shop there. So the bigger it becomes, the easier it gets. CrowdStrike is also the same thing. So smaller competitor and new competitor, very difficult to fight them. That's why these businesses are likely to continue growing and not likely to face some profit drop suddenly due to competition or losing competitiveness, right? If you look at Malaysian companies, a lot of the Malaysian companies are actually doing the old industries like manufacturing, all this. And if you have been looking into their quarterly report, why their share price dropped so much, it's because a lot of them are losing competitiveness, right? Even some retailer, I cannot name the names, you know, like some retailer, fashion brand, competitor come in, directly profit margin drop, right? Some manufacturer for fabric companies, same thing, direct competitor come in, directly revenue drop, right? Yeah, a lot of this kind of issue, or you know, production issue, scaling up issue, cyclical issue, project gonna cancel. These kind of companies don't have this kind of issue, and it's recurring income. Okay, so that's why it's way more quality, right? And asset like. So the ROE is gonna be very, very high. Return on investment capital is gonna be very, very high. Okay, same thing as this one, Square Limited. This company, right, provides payment solution like our Revenue Berhad, but at the same time, they are a more mature version where they also have their own e-wallet, and they also act as a bank. Actually, a lot of the companies in Malaysia are trying to emulate their business model, right? By getting a banking license, right? By creating an e-wallet. Even now, you can trade stocks on their, you know, e-wallet with no commission. You can trade Bitcoin as well. So companies like this, software-oriented company, payment processing company, they have very high return on equity, very high return on investor capital, and most importantly, very, very scalable, right? Nothing stops them from growing. You just need to download the app, Gautim, right? Of course, these companies, a lot are losing money because they're investing in marketing to attract as many users as possible. The moment they stop advertising, they can make huge profit. And see, companies that grow 40% per annum consistently in the past few years. Name me a few companies that in Malaysia that can grow 40% per annum in the past few years, one. Okay, consistently. Okay, not up and down, suddenly shoot up, one-off item, then drop back, you know, reevaluate the property, all this, right? So, and all of these enjoy strong competitive advantage like network effect, right? The more people use, the stronger they become. Also, one of the reasons why these companies can create this kind of new business model, strong competitive advantage, is because they attract the top talents. The culture is different. They attract the top talents in the world, and the top talents in the world choose to work for these kind of companies, right? Not like in Malaysia, right? A lot of it is family controlled. So after a few years, you know, when it passes to second generation, third generation, you know, the growth is not as stellar anymore. But this, no. Microsoft, you look at it, Bill Gates is not even involved, and Bill Gates is selling all the share away from Microsoft. He's been divesting actively. So even though Bill Gates is the main founder of the company, he started it, he grew it, all this, today, Bill Gates is not even involved. In fact, you know, he's divesting away. He don't even care about Microsoft that much anymore. You understand what I mean? So the culture is different as well. So that kind of thing can create self-growing, perpetuating, you know, income machine. And no doubt, Malaysian shares can also benefit from this IoT, AI, 5G. But again, as I say, mainly as, you know, you need to know who is the contract, you know, who's getting the contract, right? Who is able to produce things cheaper, the labor cost. All this issue is really very, you know, very troublesome. You are worried. Every day you invest in Malaysian share, you are worried about US-China trade war. You are worried about what? Labor cost, GST, SST, Forex, you know, loss, Forex gain, all these things. So it's very complicated. But US, those quality stocks, the platform stocks, clean, right? Another thing is undervaluation. Many of the stocks overseas, right, in a certain category can be considered undervalued. Okay, can be considered undervalued. Okay, so for example, right, a lot of stocks overseas are actually hidden, and many people do not know about them. Not like Malaysia. Malaysia is a very small country, so any stocks, any companies that are doing well, everybody will know, and everybody will bid up the price one. So the P ratio, all this will be very high. It's already priced in. But overseas, you can find companies like this. For example, this company called Nagaworld. They are sort of like Genting of Cambodia, and they have been growing. Look at the growth rate. Every year, 10%, 20%, not an issue, right? 10%, 20% every year, fast growth company. But then if you look at the PE ratio of the company, it's still below 20, even though their growth rate is so high. So they are always fairly valued or even undervalued, right? compared to their growth rate and all this. But if you look at, compared to Genting Malaysia, okay, similar stocks, that the growth is already stagnant for Genting Malaysia, stagnant growth, profit cyclical, up down. It's also valued at similar PE ratio. So if you look at, if you are gonna pay the same PE ratio to buy these companies, which one will look like a better deal to you, right? Definitely the one that has a more consistent and faster growth, right? But Malaysians, because we know casino is a good business, it's a recurring income, but we do not know about all these stocks because they are listed in Hong Kong, and even Hong Kong people do not know about this company because the operation is in Cambodia. So there are opportunities for you to buy undervalued stocks. By the time these companies become famous, you may not be able to buy them at such a cheap price anymore, right? So same thing. So overseas, there may be a lot of undervaluation. For example, Riverstone, right? Riverstone is finally catching up, but if you look at Riverstone compared to the Top Glove, Hatta Lega, all this, right? Riverstone is also glove making company, but listed in Singapore. Just because it's listed in Singapore, the growth of the share price is not as high as the growth in the share price of these Malaysian shares. Okay, Malaysian glove shares. So in that way, it can be undervalued as well because it's under research, certain segment in different countries, right? So that's also a different benefit of investing globally. If you insist to invest in these companies, right, this kind of industry, right, why don't you invest in a lower PE based companies? You can get higher dividend, right? The growth will be similar, right? The growth can be similar, and if you are lucky, there may be even a re-rating. The PE ratio may go and match up to their peers in Malaysia, right? Then that's a bonus earnings. Disclosure and corporate governance, right? In the past, I used to think that investing overseas is dangerous or risky because you may need to have, a lot of information that you can't get access to. But from my experience, what I found is actually it's not true. Because especially if you're investing in US, in fact, you're getting so much information, much more than you get in Malaysia. Because every quarter, they have to report, okay, their earnings in detail, and they have to do a conference call to answer questions from analysts. And sometimes you may even join this conference call and ask questions. So, and even if you miss this, there will be actually a call recording and a transcription that you can read to further understand what happened. Like this company, Bank Ozike, it's a bank. COVID-19 come. How does it affect the company? They will explain in detail here. But if you look at the Malaysian banks, is there such thing? If you invest in them, do they, tell in detail how does it affect all this with the numbers and what's the outlook, all this immediately or via a conference call? Not easy to access, right? And even if there's access of this, most of it is to the fund manager or the research house, right? Retailers like you and me don't really get information like this, right? Even if there's investor briefing, usually it's exclusive for a select few sophisticated, accredited investors, right? Small investors like me and you don't have access to that. So that's why the edge, there is a gap between the institution, information gap, and the retailer, right? We can also get information like this if we attend AGM and know what's the right question to ask, right? But other than that, not easy. But US, even though it's so far, you can understand them more in depth and faster, right? And there are so many people covering the certain stocks. And if you say, oh, US, the investors are so sophisticated, it's very difficult to find undervalued companies, right? Or undervalued stocks. It's not necessarily true as well. Because why? Because in the US, right, actually there are so many thousands of stocks, they can't cover all. In fact, I see there are a lot of undervalued stocks that are doing very well, growing very well, but nobody know. Okay, in fact, they only cover the big stocks. I mean, the small stocks, actually nobody know about them. So it's actually very easy to invest in the US, in my opinion. Very easy to invest in US and get a good return, Okay. Political stability and policy, right? Yeah, this is also another factor that makes you may want to invest overseas. Actually, when you invest overseas, there may not be that much political instability and policy. The impact of that is not that high. In Malaysia, if you look at the share price performance of the KLCI in the past 7 years, right? It has been on a steady downtrend. Okay, it has been on a downtrend, and I believe that this downtrend is due to few reasons, right? It will go uptrend soon, after maybe 5 year, 10 year. After 5 year, 10 year, the component in the KLCI index may change to the tech stocks already, more and more of the tech stocks. Because in the past, a lot of the companies in the KLCI, right? The big companies are the old industry one, right? Doing what palm oil lah, doing what property lah, all cyclical one. But the oil industry lah, right? Manufacturing lah, all cyclical. All depend on the economic growth. It's all the middle income trap business, right? We need to shift to the high tech, high growth stocks, right? For the index to go up, right? So whatever is good in the past may not be good in the future anymore, right? They have already come to the mature stage, got a life cycle one. So now we are purging. Then number 2 is the inconsistent policies, right? Inconsistent policy. Sometimes say GST on, sometimes say GST cancel, then slap one SST. Wow, this one caused the company to report profit, report loss, report profit, reduce profit, all these things. Okay, infrastructure, share hand, say on project, then after that, no share hand, project drop, share hand again, project on, right? So again, I want to share again one more thing here, even this information one. A lot of it, a lot of the time, the information, you guys know there's a lot of rumors, and sometimes the share price move up before an announcement is given out. So you see, the unfairness is actually there, right? There's a lot of people that get information much earlier than the public. So it's not actually that efficient, right? That's all I want to share. And the dependency on commodities, right? Palm oil price, raw material costs. If you look at Malaysian company, the quarterly report, the profit is all affected by these things, one labor issue, right? Oversupply property. Yeah, so many things that is dragging down. Okay, again, when I say all this, I'm referring to long-term investment. If you try to be like Warren Buffett in Malaysia, it's quite difficult. Okay, it's quite difficult. Okay, if you try to be, what's the name? There's a very famous trader, and I forgot what, Jesse Livermore. In Malaysia, yes, you can make a lot of money if you are following the trend, looking at TA, follow the trend, okay, or study the company about to turn around, or some big announcement, you see some signs, something gonna happen. Yes, you catch it down when it's low, you buy, sell when it's high. You can make a lot of money. But I'm talking about long-term buy and hold, right? Those swing trade stock, if you buy and hold, pun jalan one in the future, the return is also not gonna be looking very nice one per annum wise, right? If you look at US, why the US is going up, right? Because when Donald Trump win, right, he cut the tax, he reduced the regulation on companies, so the companies can grow without all the troublesome thing that is kacau them, right? And then he reduced the interest rate, right? He also reduced the interest rate some more. No, he cannot reduce. He forced the Bank Negara to reduce interest rate. And the majority of the big companies in US are the big techs like Facebook, Amazon, Visa, all these big companies, right? They are maturing. They're becoming bigger, bigger. The profit also showing up, right? People start to look at it, finally materialize, right? So that's why the growth is justified. It's not overvalued. It's a justified growth. It grows due to good reason, due to a solid reason, okay? And another reason why investing globally may be a good choice for you is ETF. For many investors in Malaysia, most investors, ETF are a very good thing for you to invest in, because if you do not know how to analyze stock, and which I believe many people, they try to be, everybody want to be Warren Buffett, but end up they get negative result. if you have been trying that for many years and yet you cannot find a way and you want to give up, before you give up, you at least have to try this ETF thing. ETF is sort of like giving up but making money, giving up your control over your portfolio and just trust the process. Okay, so ETF is sort of like a basket, right? You buy an ETF, it's like a fund of all these companies, and there are different kind of ETFs, right? In short, an ETF, what it does is it's a fund that helps you to invest in a certain kind of index or a certain theme of company, right? Exchange traded fund, right? In short, it's just like a managed fund that you can buy and sell, like a unit trust or mutual fund that you can buy and sell in the share market. Some are active, some are passive. This is a passive one, right? Passive one is a S&P 500. It will just follow the S&P 500. Okay, and in here you have your Apple, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, which also invests in Apple, Visa, Procter & Gamble, Johnson & Johnson. So if you look at this, the top 5 companies, they are all growing very fast. See Facebook, YouTube, right? Google is YouTube, right? Amazon, Apple, all these are still growing very fast. That's why they are bringing the whole index up. Actually, most of the company, you see the Johnson & Johnson, P&G, they are not growing well. They are not growing fast one. Including Visa also is not growing fast one, Visa actually not bad, okay? Visa actually doing okay, yeah. So if you look at many of the bottom one, the other ones, they are not doing that well one because they are also heavy industry, cyclical companies. There are also many, but it's mainly being driven up by all these tech companies, okay? Or if you look at, if you are a very millennial or if you are very high growth, high tech investors, you can also buy this ARK ETF, right? ARK ETF is a very famous fund where they invest in innovative companies that they believe has a good potential to be, the market leader in future. So you have Tesla, Invite, Square, Roku, right? Zillow. Actually, most of the companies, most people never hear before one, right? This ETF gave you 100% in the past 1 year. If you invested last year until now, it gave you 100% return a day, okay? Or if you want to bet on China, it's gonna be well. You just buy this ETF, right? You buy this ETF, it includes Alibaba, Tencent, Meituan, JD.com, all this, right? You don't need to go and research so much. You can just go about doing your job. Every month, just dollar cost average, buy these kind of companies. You can get a pretty good return. And the good thing with investing in ETF blindly, this kind of ETF is you won't, look at some stock tip, then you chincai, because of greed, people say it's gonna go up, or you got some insider news, you buy, then it drop 50%, you're gonna start. Some goreng stock, you see it go up, you go and buy, then it drop 30%, you're gonna start. You won't have those issues, right? Because you're buying quality, great companies in a very diversified way. Okay, as long as the world economy improve, as long as the world continues to innovate and grow, you grow together. Okay, so those are a few reasons why investing globally may be very good for you. Another reason is swing trading, right? Swing trading, yes, Malaysia is very suitable, but sometimes the biggest profit come from big stories. Like Malaysia, the biggest profit recently come from the glove stories. Wow, COVID-19, glove go up. Okay, there are actually stories like this happening all around the world. Like in the past, last year is about the fake meat, Beyond Meat, and their competitor, whatever. Then now got another story, tech stocks, right? Then got electric car story. Any company that is involved in this, the share price will shoot up, right? Not necessarily investment grade. It can be speculative, can be goreng one. But if you want to goreng stocks, if you look at it globally, it's way more story, way more opportunity for you to goreng in 1 year, make 100%, 200% return, okay, based on the story, right? Even you see a lot of this, Neo, Helion, whatever, Nikola, I don't know how many of them is good electric vehicle car, but as long as people want to buy them, in the short term, it's gonna fly to the moon anywhere they like, okay? But you need to know when to run, right? So if you are into short-term swing trade, just going up, make money. There are many of these exciting stocks overseas. Every year is different story. If you are aware and you look globally, confirm you can find stories like this to trade one. Okay, you join the WhatsApp group, the Facebook group, confirm got one. And then you look at them, look at some, there will be some guru that will share, oh, this stock good, then follow lah, right? But of course, do your own risk management and technical analysis. So, example, cannabis stock, right? If you look at cannabis stock, the growth of these cannabis growers has been very fast, okay? 10 times, quadruple, double every year, right? Not all companies have this fundamental, but some companies really have this fundamental one, right? Cannabis, that means they are ganja manufacturer. In Malaysia, it's illegal. In US, they are starting to make it more and more legal. The acceptance is higher and higher. That's why the growth rate is very high. This story has been around for 3 years. So that's why you see those that bought on day one, they triple their money on day one. They bought the IPO stock, they would have tripled their money on day one. But if you cap for 1 year, 2 years, the company share price actually drop and the story subside. But if you are aware, if you know how to find the companies that are actually producing result like this one, that is actually seriously doing business one, not goreng stock one. Just like in Malaysia nowadays, everybody say the glove manufacturer, share price shoot up, but it's gonna same that pattern one. In 1, 2 years, it's gonna go back down to earth. Only the one that is seriously doing the glove one is gonna continue up one. Understand what I mean? So you need to know what is this creature and different creature, different situation, different strategy. Okay. Same thing like Square. You see, got story one, e-payment. Within 5 years, it go up 16 times from IPO until now, went up 16 times. Okay, 16 times bigger, right? Because they are fast growth company, got story, thematic, some more. Right now, MCO push the share price shoot up, right? Because MCO, everybody need to, buy things online, all this, so people are goreng this stock up. Now, you ask me this story, will it drop back one? That means people bought with this story, it will drop back. Impossible. But it's definitely gonna drop back to 80 like that, or even higher, and it's gonna remain. And in the future 10 years, I'm sure it's gonna be more than 200, maybe 400, 500, because it's supported by real fundamental growth, not just going out of nothing one. Okay, even though currently it may be a little bit overheated, it may or may not come back down. But if you look at the 5-year horizon, definitely it's gonna be worth more one. Okay. So what I want to share is, if you're able to spot the story, whatever story, the story may not be available in Malaysia, like cannabis story or e-payment story. In Malaysia, we have the revenue pay but because they are not doing online checkout and they are not doing e-wallet, so that's why they didn't get to benefit seriously from the story, right? But if you know this story, you saw this opportunity, you can look globally which stock can really benefit from this. And if you're early, you could make serious return. Okay. And lastly, if you invest in US and globally as well, there is also opportunity for you to do special instruments like options, right? Options. For example, in Malaysia, we have put warrant, right? Put warrant. Put warrant is what? Put warrant is like a insurance. If you buy a put warrant, it's like you're buying an insurance. If, for example, this put warrant, if Top Glove share price drop, this put warrant, this insurance, right, will be worth a lot of money. Because when you buy this put warrant, it's sort of like Kenanga Investment Bank insure you that Top Glove share price won't drop below $8.33. If it drop below $8.33, they are still going to buy Top Glove share from you, or they're still going to pay you $8.33. Understand what I mean? To buy the Top Glove share, right? So in a way, it's sort of like a tool. If you bought a Top Glove share, but you takut the Top Glove will drop in the price, then you can buy this put warrant to hedge, right? Now, what is the logic for Kenanga Investment Bank to sell this kind of put warrant? Okay, I don't know what's the logic, but actually in US, it's a very useful thing. Why do I say so? If you look at insurance, right, usually the people that buy insurance make money, or the people that sell insurance make money, right? Of course, overall, the claim, total claim on the insurance is gonna be lesser than the total insurance premium received. Otherwise, insurance company, how they make money? So definitely it's gonna be way more profitable to be an insurance seller than be an insurance buyer. So Kenanga Investment Bank, in this way, in the long run, they are gonna be profitable by issuing put warrant rather than be the one like us buying the put warrant from them to speculate. They are actually treating themselves like an insurance company. So what I mean is, in the US market, right, if you find certain stocks like maybe Facebook or Square Limited or C Limited, whatever, if you find this kind of company and currently they are a bit overvalued, right? They are currently a bit overvalued. So there is actually opportunity for you to do something called issue a put option on these companies. When you issue a put option on this company, it means if the share price drop, you agree to buy at a certain price. So for example, let's say this company, Bank Ozike, it's at $22.50. You can actually sell a put option at $20. That means if the share price dropped to 20 and below, you will still have to buy the share at $20, and in return, you receive 90 cents. Now, why would you do something like this? It's because you like this share, but now the price is a bit high, right? You want to wait for it to drop to 20, only you buy. Okay, when it's 20, you definitely will buy at the one. But when you issue this put warrant to buy the share, agree to buy the share when it's 20 and below, you are getting paid. So before this, if you don't have this put option, right, you have to wait for the share to drop until 20 before you can buy it. But now, even if the share do not drop, the share price do not drop, you can parking at $20 and get paid every month by issuing this put option. So it's actually a very useful tool for retail investors like you and me to make consistent income from the stock market, right? And these things are not available in Malaysia. Only the people with the license, the big banks can do this. So in US and Hong Kong, there's a lot of opportunity for you to get a better return and flexibility for you to make money. Too many options. Okay. So that's all for my sharing, especially on the global investing part. Any question you would like to ask me? I see some questions on the chat box there, right? I just got my overseas trading account funded, ready for it. Wow, good, right? Inari, Franken, you believe they can grow at 20-30% per year? Are you sure? Inari, they are such a big company already, right? Are they really able to grow 20-30%? 10% a year? 15% is possible. 20-30%? With the companies, now producing their own chips, some of the companies could be dangerous. Could you please share low commission overseas broker for Malaysian? So TD Ameritrade is one of them, is zero commission. For option trading, why did TD Ameritrade use so much time to open an account? Wow, like that, I also don't know how to answer. This one you need to ask. TD Ameritrade. So Victor asked, how about Intel and AMD? So actually, right, if you look at Intel, Intel itself is a very competitive business now as well, right? They are always constantly chasing, right? Chasing to produce a better and better and better chip, right? And they are running against time. And the growth rate, see, this is why I say the same thing. I'm not saying Inari cannot. I haven't really studied it fully, but like this. But if you look at, Intel, their revenue growth has been stagnant, right? Because they, They already take all the market share that they can have, right? So now they are, but the thing is, they are still pressured to keep coming up with a new product, new innovation. So that's why the growth rate is stagnant, but yet, their cash flow is always cannot have high cash flow, and their margin is always low, because even if you keep trying to innovate, come up with a new product, it's very difficult for you to increase the revenue because it's already so matured. Yet you need to keep improving, right? So that's a sharing. AMD, on the other hand, is fast growing. It's a fast growth stocks, AMD. But at the same time, it's quite research and quite technology intensive. And they are also fighting to have the economies of scale. So it's also quite a challenging business. I prefer those software, very scalable business that have, easily expandable margin, or good cash flow business with low PE. Okay. So I hope that today you have benefited from my sharing and you actually enjoy whatever I'm sharing here, and you learn a lot, especially on global investing. Okay, so maybe you can share a little bit of your biggest takeaway today, what you learned. YG Alvin asked, what are the ETF that is focused on US is worth to consider beside SPY and VOO? The ARKK that I shared just now, the ARK Innovation, is not bad. Okay. By the way, VOO and SPY is the same thing. Okay, they are similar thing, right? Just a different company produce only. Okay. Yep. So I am done. Cameron, maybe you can. Yeah.
Yeah, okay, all right. So thank you, Meng Teck, for sharing today. Because we learned a lot from you today for your sharing because of this global investing. And yeah, you answered the question from Flo as well. So is there anything you want to add on and then to wrap up for the maybe last sentence from you?
Last sentence will be, I think investing nowadays, right? Yeah, you look at the back, I have a lot of books. Yeah, those books are very good start, but I believe that nowadays the investment environment has changed. If you try to use PE ratio, those indicator like the past, they do work and they are good. But if you're looking for super good return, high return in a short amount of time, then I think you need to be more open-minded, and you need to look at companies and really look at the qualitative side, and you need to do a lot of projection, not a straightforward look at PE ratio only. Because most of the good companies in the world, they are actually loss making. They say Tesla, the P ratio 1,000 something, So you have to look at that, and you have to look at the business model is very different nowadays, because a lot of it is tech counters. Like somebody, Ian is asking, what about N Financial? I personally think it's not bad, right? If I get to have the IPO, I will buy, right? But need to look further into the prospectus, which I haven't. So that's why nowadays a lot of the company, they are using a different kind of growth model. So you need to change your way of looking and finding good companies. Focus more on the revenue growth, right? Even if they are loss making, be open-minded, look at it, why, and investigate whether they have the competitive advantage to continue. Okay, so if you enjoy my sharing, right, and you want to follow me more, you can actually follow my Facebook page at Savvy Investment. In the future, when I have a Facebook Live, maybe upcoming next week or 2 weeks from now, I may have another public listed company boss that will come and do a live sharing with us. If you're keen, you can join and listen to another, swing trading potential company. Because as I say just now, nowadays in US, the information gap between institution and retailer is less, but in Malaysia, it's actually quite big. And it's the job of Cameron and like us as well, like me, Savvy Investment, and many other social media influencer in the stock market field, to try to bring as much information to make it more fair for retailers to invest with an advantage. Okay, so follow us at Savvy Investment if you like my sharing. And thank you, EE Cameron, for inviting us to come and give a sharing on your platform.
All right, so welcome, Meng Teck. By the way, we thank you for your time as well because you spend your 1 hour here, more than 1 hour here to share with us at this Sunday nights. All right, so let's guys, if you guys keen to have any more information, any more sharing from this Meng Teck, so you guys can just go to our live link there. So we do have Meng Teck's link there, so you guys can click there and then to follow and like each page. All right. So thank you, Meng Teck. So we just yeah, thank you for sharing, Meng Teck. All right. Have a good day. Bye bye,
Bye.
Meng Teck. Bye bye.